Hi, and welcome again to another edition of Market Analysis for today, February 16th, 2024. I'm Giovanni Benacourt, analyst, trader, and educator with Vantage Markets. Well, for markets, the first rate cuts timing is irrelevant, at least not initially. Anything that suggests the Federal Reserve will hold off on cutting borrowing prices longer has been met with a remarkable amount of market recovery. The first rate cuts anticipated timing has dropped from March to June in just 1 month. However, the S&P 500 has increased 5.5% within that same time frame, breaking through the 5,000 mark and continuing to rise, with declining retail sales offering a unique point of evidence in support of an early start to cuts. Thursday's closing bell saw the index reach a new high. There have been two significant hiccups lately: the hotter than expected inflation statistics released on Tuesday following the Federal Reserve's January meeting, during Jerome Powell's crushed expectations of a March decrease. On both days, the S&P 500 saw a decline of more than 1%, which has only occurred once in 2024. We're not that into the year anyhow, but both times such losses were recovered in a span of 2 days. Now, more proof of postponed rate cut schedule is being absorbed by the stock market on Friday. In a speech on Thursday, Atlanta Fed President Raphael Bostic presented a quite compelling case for the central bank's deliberate approach. According to him, there is a compelling case for ongoing patience with the robust U.S. job market, muscular economic growth, and renewed business optimism. Also, he is not yet comfortable with the fact that inflation is unquestionably approaching the central bank's 2% target. Now, he is a voting member of the Fed, thus his opinion matters. However, the stock market will most likely move past it quickly. The market will be satisfied as long as the next rate move is lower and the economy and earnings continue to be robust. So with that being said, let's take a look at what we can look in today's market fluctuation. So here's a NASDAQ. It is way above our moving average. I have a resistance of 18,100. I've been having it all week. Let's see if today will be the day that we reach that. I mean, again, we could just pull back and turn around and just drop. But, it's Friday. We could probably go out with a bang. We're at the 18,000 marker right now. Let's see if we can sustain it. So I'm being bullish. And then we have the S&P. The S&P could easily revisit that high of 12th of February again. So let's see if we could come in and hit 50.75. The Dow, however, is in a more downbeat. It opened where it closed, but it is retreating. It's more of a pullback. But let's see if that was the bottom of it, and now it's turning tides and seeing if it will reach that 39,000. I would doubt it, but it could probably just be. Let's see what happens. Then we have the crude oil. Crude oil is in a tight range of $2 between 78 and 76. The pivot point is 76.9, 77, the middle of it. So let's see if the market continues to pull back, to do a retracement and down, and comes down all the way to our moving average and bounces off of moving average, and then takes another attempt at reaching that $78 marker. So $80 to say $79 again. It could happen, but I'm more of a $78 and change. So right now, be selling crude oil, but you could always turn around. Nat Gas has been on a tear all week long, like for 2 weeks, really. Yesterday, it did do a small of a correction, but quickly closed it into the red. And now we are basically in yesterday's range, trading range. So we can take this as with a grain of salt, as it could probably do a correction so that the RSI could hop into the neutral zone and do the same thing as yesterday. Just at the end, come back down and boom, another sell-off. So I'm still looking for 155. Then we have gold. Gold, has recovered. It's still, it's looking to stay north of 2,000. It needs to stay north of 2,000. We have the moving average right above the market, so that's going to act as a dynamic resistance. So let's see if it breaks through it, and that will be a signal, obviously, for you to stay in the trade or to enter the trade, and then see if we can meet our target of 2030. Silver is also looking to trend higher. So let's see if we can reach 23.5 today. The market, the average is below the market, so it's acting as a dynamic support, but it's too far away from it. And then we have copper that is doing a parabolic movement. 380 most likely is going to be met. We have crossed the 50 marker in the RSI, which implies a pickup in momentum to the upside. Then we have Bitcoin. Bitcoin 54,000 today per Bitcoin probably, but we are in the way overbought in territory. So deeper correction could be made. You never know. And then the currencies. The euro finally has been able to stand to support 107 and has bounced off of it. Let's see if it will reach, if it'll reach 108. The moving average is right where the market is. So we want to be able to see if the market is going to be able to push across it and come back to that high, and then obviously 108. But everything is possible. The pound is bouncing off of the moving average. Okay, the resistance. Let's see if the pullback, the retracement has been, it was deep enough, and now it's going to turn tight, and then see if we can reach that 126.5. And that could happen if we see that the dollar index drops. But the dollar index today opened with a gap up, so that would imply, and it's been closed already, so that will imply that momentum to the upside is favored for the dollar index. So keep that in mind. Well, that's it for me today. I want to thank you for watching me, and I will see you guys on Monday. Bye now.